Vanakkam. Now, today I am going to take up a very, very interesting topic, and this is the latest one because RBI's latest guideline on opening of current account and CC and OD account. Yeah, they have issued a new circular, and this we are going to discuss it tomorrow. This will be helpful to you even during the concurrent audit. This is a very, very hot topic. And what's the introduction they say? Please refer RBI's 2022-2023 circular /27 POR CRE REC 23/21.08.008/22/23 dated 19/4/22. This you can download from the website and you please go through it. I am going to highlight the important thing of this circular, and this is being issued, that is, this circular is being issued to enforce credit discipline among the borrowers. This is because lot of borrowers, after obtaining the loan from banks, they used to go to other bank and they open the current account. So this indirectly made the bank which has given the money into a problem. So that is, the borrower is diverting the fund from instead of putting the fund at the lending bank, they have opened a separate current account and they are doing it. For this, the RBI has come out with this circular, and it's a very, very interesting circular, and every chartered accountant should know it. Even the customer also, they have to know this. And it helps the banks to monitor the accounts. It's a better monitoring done by the lenders. So this is a very, very important circular that you have to see. To whom it is applicable? It applies to the opening of current account and cash credit account and overdraft, because this is a very, very important circular. It applies to opening of current account. It applies to opening of CC and OD account. And it's being done by the all scheduled commercial banks and all payment banks. That is, this circular is applicable only for all scheduled banks and scheduled commercial banks and all payment banks. What is called as scheduled commercial bank? Scheduled commercial banks are those banks which are included in the second schedule of RBI Act of 1934 and which carry out the normal business of banking, such as accepting deposits, giving out of loans and other banking services. So deposit acceptance, giving loan and providing all other services. So this is to be covered in the second schedule of RBI Act. Let us see what are the important things that they are covered in the scheduled commercial bank. Now it is being divided into 4 categories or 4 sections. One is public sector bank, including State Bank of India, nationalized banks, other public sector banks, and private banks, foreign banks, and regional rural banks. You will get a very big list for this. What are the items that is that? Then you can go and refer the RBI. You will get the full list. Here, the circular is applicable to the payment bank. What is a payment bank? A payment bank is like any other bank, but operating on a smaller scale without involving any credit risk. That means it pays only. There is no advance given and there is no credit cards. So in simple words, it can carry out the most banking of the operation, but cannot advance loans. So for payment bank, advance it cannot advance loans. That is, it cannot give loans or it cannot issue the credit cards. In India, only 6 payment banks are there, namely Airtel Payment Bank, India Post Payment Bank, Fino, Paytm Payment Bank, NSDL Payment Bank, and Jio Payment Bank. So these banks are covered by this circular. Exposure. They are using the word exposure. It is nothing but sum of loans sanctioned. It is a sanction limit of fund-based and non-fund-based credit facilities availed by the borrower. So exposure means all fund-based and non-fund-based for the sanction loan. It is not outstanding balance for the sanction limit, and those limits have to be sanctioned within India. So that is, credit facilities carried in their Indian books shall be included for the purpose of exposure of calculation. So funded and non-funded, and the limit sanctioned within India is called as exposure. And banking system it includes scheduled commercial banks and payments bank. That is, banking system means if wherever they use in this circular banking system means scheduled commercial banks and payment banks. And what's the aggregate of exposure is being divided into 4 parts. Now, they have, with reference to opening a current account, they have divided the sector into 4 parts. Exposure less than 5 crores. Exposure here means funded and non-funded advances sanctioned, where OD facilities availed or not. Exposure of less than 5 crores, OD facilities availed, it is not. And exposure of 5 crores and above. Exposure of 5 crores and above, where OD facilities are availed. Exposure of 50 crores and above, OD facilities are not availed, but other than OD facilities are availed. That is nothing but a term loan, bank guarantee, all will be there. And exposure of 5 crore or more, but less than 50 crore. So there also OD and CC facilities are not available, but other than the OD, CC available. That is in the form of term loan and bank guarantee. Now we are going to have discussion of each and every head separately. Exposure of aggregate of exposure is funded and non-funded less than 5 crore of the banking system, where OD and CC facilities. So they is divided into 2 things, OD and CC. If OD and CC there, can a banker open a current account? OD and CC facilities are not there, but other loans are there, can a banker open the current account? That's the procedure that we are going to discuss now. Here, bank can open current account. That is, any loan, the borrower has already got exposure of loan less than 5 crores. Any bank can open current account without restrictions. So whether it's a lending bank or non-lending bank, that's a different issue. Banks can open current account without restrictions and obtain undertaking from the borrower to inform the bankers that when credit facilities exceed 5 crore or more, that has to be explained to the bank. It's a declaration they have to obtain. So bank can open, any bank can open current account. And for this, if the limit has exceeded 5 crore, that has to be informed to the bankers by the customers. The declaration has to be received. Now, exposure of aggregate 5 crore and above, where OD and CC facilities available. Now, they divided less than 5 crores and above 5 crores. Less than 5 crores, any bank can open, and the bank, they have to get the declaration. And now the loan exceeding 5 crores, even it may be 100 crores. So can a bank is allowed to open? Here they divided the exposure into 2 parts. One is aggregating total exposure of at least 10%. So 10% and above. 10%, less than 10%. They divided the thing into 2 parts. Open current account by borrowers with any bank where the aggregate exposure is 10%. Less than 10% open at the highest bank lending. Suppose if the total amount is above 10%. So the highest bank which has lent the money, they can open the current account and not other banks. All other banks who are all given the money, they are called as lending bank. And now the limit has not exceeded 10%. So within 10%, then among the 10% highest bank lending, which bank has given the highest loan, they can open the current account. It is very, very simple. This concept is applicable for multiple banking and consortium banking. If it is an individual banking, yes, every amount is 100 exceeding 10%. So they can open current account. So they within less than 5 crore, any bank can open current account. If the amount exceeded 5 crore or more, only the lending bank, they are permitted to open current account. Next, other lending banks can open collection account. So you go to the point number 1. It is exceeding 10%, the highest bank, they can open current account. But other lending banks, suppose X bank, X, Y, Z, there are 3 banks who have financed the borrower. X is the topmost lending bank. They can open current account, and B, Y and Z, they can open only the collection account. So that means for their loan, they can get the credit. But for the purpose of the limit, they can open the collection account. And from that collection account, the money has to be transferred to the main account. That is where the current account is opened. From the collection account, the money has to be transferred within 2 days. For that, please refer point 1 and 2. That is, in point 1, they say that the limit exceeded 10% total exposure, and less than 10%, it is the highest lending bank. They can open current account. Then from collection account, the money has to be transferred to the account within 2 working days. And balance in collection account. Now, all the other banks, other than the main bank, all the lending banks, they open the collection account and they receive the money. And how to utilize that money, that is also being clearly defined by the RBI. Any money that has been received in the collection account should not be settled for that bank's loan account, for that bank's fund and non-fund facilities. That means the collection account, the entire collection amount has to be transferred only to that main current account and not to this bank's CC account. So fees and charges, if it is any, that can be collected, that can be taken from the collection account. And once again, I'll repeat, collection account can be opened by or other lending banks other than point number 1, other than point number 2. From the collection account, the debit is allowed only to be transferred to the 1 and 2 account and not to their loan account. For if any money is received directly towards their loan account, they can adjust. And if the money is being received in collection account, it has to be transferred within 2 days. And there is no debit other than the fees and charges are allowed. So this is a very, very important thing. And non-lending banks, the very, very important thing. Non-lending banks are not permitted to open current and collection account. Suppose if you are an audit, you have to be very, very careful whether it's a lending bank or non-lending bank. And see the exposure. The exposure is less than 5 crore. Any bank can open current account. But if the limit exceeded 5 crore or more, then it has to be done through a collection account. Main bank, they can open, that is highest lending bank, they can open current account. Then all other lending banks, they can have the collection account. And from there, the money can be transferred within 2 days. But non-lending banks, a very, very important thing. Non-lending banks are not permitted to open current account or collection account. This you can see from the customer's balance sheet. In the customer's audited balance sheet, you can find that from where the customers have opened the current account, from where they are having the account as collection account. So this is another important thing. Now you have to see. Now, third part we are going where CC and OD limits are not there, but all other loans are there in the form of term loan, in the form of bank guarantee or LC, everything will be there other than OD and CC. So now the exposure is 50 crore and above. 50 crore and above. How to handle this? Who has to open the current account? Here, the main banker, that is who has got the main limit, can open an escrow account. That bank is called as escrow managing bank, EMB, escrow managing bank. All lending banks are part of escrow account, and they have to agree to the terms and conditions which are mutually agreed. They have to agree. So as escrow account is there, and all lending banks, they have to accept to the escrow agreement. Next one is current account can be opened or maintained by the escrow managing bank. That is topmost bank, they can open the, that is topmost lending bank, they can open the escrow account. And all other lending banks, other than the EMB, that is escrow managing bank, they can open only collection account. For their individual financing, they can open, they can get the money in their cash credit account or OD account. But for other banks, they are receiving it, they can act only as collection account. And money has to be transferred from the collection. Again, money has to be transferred from the collection account to the EMB within the days prescribed, which has been which have been mutually agreed. And another important thing is there is no prohibition in the number of credits in the collection account. Any amount can come. Any times the money can come to the collection account. But debit is restricted, and debit is restricted only to the payment of fees and charges and not for the loan account. For loan account means not for the loan account of the lending, other lending banks. So non-lending banks shall not open any current account for such borrower. So a non-lending bank can open current account for the limit or exposure of less than 5 crores and not for other loans. Now, again, they divided this exposure into above 5 crores, less than 5 crores, above 5 crore and above, less than 50 crores. How to deal with it? No, there is no restriction by any lending bank to open current account. So, any lending bank, they can open current account, and non-lending bank, here they say that non-lending bank can open only the collection account. But this type of opening with the other banks, then the permission has to be given by the main bank. Yes, you are permitted to open the collection account. From collection account, the money has to be transferred to the current account. Again, there is no, any number of credits can come, but only debit is restricted, that is in the form of services and fees. Debit can be done only for the fees or charges and not for the loan account. So this is a very, very simple thing, thereby you can easily understand. And other items are banks, that is the exposure of aggregate of 5 crore and less than 5 crores. What are the restrictions? So any bank can open the current account without restrictions and obtain undertaking from the borrower to inform the bankers that when the credit facilities exceed 5 crores, they will inform the banks. So it is very, very simple. OD and CC avoid. Less than 5 crore, any bank can open. Exposure, that is exposure is funded and non-funded. And above 5 crores, highest lending bank, they can open current account. All other lending banks are called as the collection agent. And from the collection agent, they can transfer the money to the main account. And all the collection amount has to be transferred. The collection account should not be adjusted towards the loan account, and the services and fees charges can be debited from the collection account. And non-lending banks are not permitted to open. Non-lending banks are not permitted to open current account in case of any loans. In case the borrower has got OD and CC. But in case the borrower has got no OD and CC, again they say that loan above 50 crores and above. So escrow mechanism should be there, and collection account should be there, and only lending banks, they can open the collection account, and non-lending banks are not supposed to open the collection account. From there, they can transfer the money to the main account. In case if the loan falls between less than 5 crores, any bank can open current account without restrictions and obtain a declaration from the party. In case if the loan exceeds 5 crores or 50 crores, then all other rules are applicable. So this is a very, very important thing that you have to remember during the audit. And if you find this in the balance sheet, then you have to see whether the customer has followed the RBI norms or not. Banks are not allowed to open the current account. So that's why nowadays the bankers, they start to get a declaration from the customer saying that we have not got any loan from anywhere. And what are the other information with reference to opening of current account is no loan is available. Any bank can open current account, but due diligence has to be carried out. If in case the party has not availed ODCC or any other loan, then any bank can open current account. Aggregate credit facilities is less than 5 crore. In case of loan is borrowed, in case the borrower has borrowed the money from NBFC, financial institutions, cooperative banks, non-banking institutions. So any bank can open it, but there is no restrictions. Anybody can open the current account. If the amount exceeded 5 crores, 5 crore and above, then all the rules and regulations which we have discussed are applicable for the accounts, or whether if for the loans lent by NBFC, financial institutions, cooperative banks, and non-banking institutions. And now, so far we have discussed opening of current account. Now we have to see the customer, they approach the banks to get the OD and CC. For that also, the RBI has given the instruction, sanction of OD less than 5 crores, 5 crore and above. So this is this way they have defined the thing. And now we are going to see the highlights of the loan, that is OD and CC. They applied for less than 5 crores. There is no restriction to any bank. They can sanction OD and CC for less than 5 crore. Any amount they can sanction. There is no restriction. And for that, obtain a declaration from the customer that if the loan cost, so they say that it's a banking system as a whole. They can borrow from IOB, they can borrow from Canara Bank, even they can borrow from the foreign bank. And all this, if the limit exceeded 5 crores, then the declaration which the customer has given, which the borrower has given, and they have to inform the banker that my limit or our limit has crossed 5 crore. Now we are going to see the sanction of loan of 5 crore and above, that is OD and CC, that is exceeding 5 crore and above. Total exposure of the borrower in the banking system exceed 10%. That is aggregate system, aggregate loan exceed 10%, there is no restriction, any amount can be sanctioned. In case if it is less than 10%, in case if the loan is exposure is less than 10%, then the highest lending bank can give any quantum of loan and there is no restriction for it. Thus, other lending banks can have only collection account, and for them they can have the credit in their CC account. But if they are receiving the money for other banks, they have to keep the same as collection account, and from the collection account they have to transfer to the main account. Banks with less than 10% exposure. Now, highest bank can give, but other than the highest bank and the exposure is less than 10%, what type of loan they can give? They can give working capital demand loan or working capital term loan. And more than one bank has got aggregate of 10% or more. Suppose if you go to the aggregate and one bank has given 12% of the total exposure of the borrower and the other bank has given 14% of the total exposure. So 14% or 12%, it is not the highest, but it is left to the discretion of the borrower by the way of mutual agreement between the banker and borrower. There is no restriction. The highest loan can be, any amount can be sanctioned. And now, so far we have discussed about the current account and OD account opening. And there is a specific exemption that has been given by the Reserve Bank of India for the following transactions. For the following transactions, banks are permitted to open current account without any restrictions. But in other restrictions, we already discussed, we have to follow all the restrictions, but there's a specific exemption given by the RBI that specific accounts which are stipulated under various statutes, specific instructions of other regulators, regulatory departments, central and state governments, accounts opened as per FEMA, you can open, and accounts for payment of taxes. Sometimes some bankers, they are not having tax collection facility, duties collection facility, statutory duty facility. So they can open a separate account in another bank. For that, no specific permission from RBI is required. Accounts for settlement of dues related to debit card, ATM card, credit card issuers, acquires, and here accounts of white label ATM operators and their agents are outsourcing current. What is white label ATM? It means the machines are owned, established and owned and operated by non-bank entities. That is, they are giving the ATM up to the private persons, but ATM machines are being owned by the non-bank entities. So non-bank entities are incorporated under the Companies Act of 1956, or now it is 2013, are allowed to operate white label ATMs. And accounts of cash in transit companies, cash replenishment agencies for providing cash management services, they are permitted to open a separate account other than the borrower, other than the ODCC account. Accounts opened by bank funding a specific project receiving monitoring cash flows of that specific project, provided the borrower has not availed any OCC or OD facility for that project. If any loan is being availed for any particular project, then they are being covered under the definition of less than 5 crore and above 5 crore. And if there is no loan has been availed for the project, so they can open the current account with any bank. And for interbank accounts, they can open the account. And accounts of all India financial institutions say that Exim banks, they can open, NABARD, National Housing Bank, SIDBI, you are permitted to open a separate account. And accounts attached by orders of central government or state governments, regulatory body, courts, investigating agencies, wherein the customer cannot undertake any discretion debits because debits are restricted. So they are permitted to open they are permitted to allow the account to be operated. And all the accounts have to be used only for this specific transaction. The point number 1 to 10, all the accounts have to be used only for the specific purpose and not for any other purpose. And the bankers must flag these accounts. That is, the banks must show all the accounts in CBS for easy monitoring. This is another important thing that you have to see. And what are the other instructions they are given in the circular is bifurcation of working capital facility into loan component and cash credit facility. That is, there is a working capital limit. What is CC and what is other than that? So that has to be monitored, maintained by the individual banks, including consortium bank. That is total working capital limit. In working capital limit, what is CC and what is WCTL or working capital demand loan. So all these have to be maintained individually by the banks. And lending banks monitor the accounts on half-yearly basis. So all the lending banks, not only here, all the lending banks, they have to maintain, they have to view the accounts half-yearly basis. On half-yearly basis, they have to view it, and this can be monitored by the bank's head office, regional office, and zonal office. And term loan account should not be routed through CC and OD. Suppose if any borrower has got the loan, as in the form of term loan. From term loan, the money has to go to the supplier's account, not to the CC and OD. So this is a very, very important thing. Even one can assure that term loan amount can be, fund can be transferred from CC to term loan towards payment, towards EMI installment. But there should be sufficient credit in the cash credit. But there should not be any debit other than the loan sanction, interest and charges in the term loan. Here, the RBI circular has clearly stated that the term loan amount should not be routed through CC and OD. So as an auditor, you have to see all this because this is a very, very important thing that you have to see. This is a thing I want to say about the importance of the RBI's highlights, importance of RBI's circular. This is a I want to see, and here you have to see any bank can if the loan amount, once again I repeat, if the loan amount is less than, exposure is less than 5 crore, if CC and OD facilities are there, any bank can open current account. The exposure is above 5 crores, only the lending bank which has given the highest amount, they can open the current account. Non-lending bankers are not supposed to open the collection account and current account. This is one. And where there is no CC and OD, but other loans are there in the form of term loan, then if the amount is above 50 crores, escrow mechanism will be there. And other than all other lending banks are called as the collection agent. From collection amount, they can transfer to the escrow. And if the loan falls between 5 crore and 50 crore, so all lending banks are permitted to open current account. And non-lending banks are also permitted to open collection account in case there is no CC, no OD. And if the amount is less than 5 crore, any bank can open the current. This is what the RBI has clearly said in its circular. So be careful, and while doing the audit, whether the current account opening is done as per the RBI circular or not. This is what I want to say with reference to RBI circular. Thank you very much for the patient hearing, and Nandri Vanakkam.